Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices. I would just like to start by apologising for not posting videos the past 48 hours. Unfortunately, I've been fighting an awful stomach bug, which has kept me pretty much bedbound for the past 2 days. So feeling a lot better today, hence why I'm posting the video. So thank you very much for all of your patience there. Just before I start today's video as well, team, I just want to quickly talk about my Signal team. My Signal team, we had a fantastic month of January. So the first month of the year, we ended up 14.09%. I won a total of 17 trades and 5 losses, which gave me a win rate of 76%. So very good start to 2024, and that's how I hope to continue this year. If you are interested in joining my Signal service, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's video. All you have to do is scroll down, click on that link, it will bring you to this website, and then once on the website, you scroll down ever so slightly, and you'll see you can subscribe here. The monthly subscription for $29, and that will give you access to my Telegram group chat where I also post my daily market research. Anyway, enough about that. Let's get started with today's video. As I'm sure you're all very keen to hear my analysis on the markets. We have the S&P 500 currently trading down at 4,871 after yesterday's sell-off that we saw in the markets after Jerome Powell, no surprise, come out and poured some very cold ice water on the markets. The market has priced in 6 rate cuts. You could even argue 7 rate cuts this year, and I've been saying for the past couple of weeks and months that I don't think that's going to happen. A rate cut was priced in as early as March, and we had Jerome Powell that basically come out during the press conference yesterday and said that there's a very high probability that a rate cut in the month of March will not happen. And as a result, we saw the market sell off ever so slightly. But the good news is that I do see this as a buying opportunity ahead of earnings as well. Tonight we hear from Amazon, Apple, and Meta. I think Meta and Amazon have a very good chance of reporting a good quarter. Apple I'm a little bit nervous about, as there was a report from a Chinese stock analyst who is, he's known for being very accurate in his previous assumptions, but he said that he thinks that iPhone demand is down by 15% as Apple is shipping 15% less of iPhones. It's the new iPhone 15, of course. But, S&P 500 in terms of a technical, in terms of technically speaking here, in terms of a technical pattern, we haven't really seen that much deterioration. By that, I mean, this is the uptrend that we've been forming since those October lows. And yesterday we went to pretty much going back test this uptrend, but we are bouncing nicely during today's trading session. I personally do believe that before we do see a short-term peak in stock prices, I think that we could potentially go and see 4,950 to 5,000. So I do see this as a buyable dip. Moving over to Nasdaq100, we currently see the Nasdaq trading at 17,250. This was from the highs of 17,600. Very similar to the S&P 500. If we draw this uptrend line from those October lows, we haven't even gone and back tested. So I think that yesterday was just a healthy correction, and I think it is a buyable dip. And then finally, moving over to the DowJones30, very similar to the S&P 500. If we go from those October lows and we draw that trend line, we didn't even go and test the backside. I think that we are becoming a little bit overextended towards the upside here. This is an uptrend that I've been drawing since those lows that we formed back on the October 2022 and the highs of that bear market rally that we saw back in August 2022. And as you can see, we are, peaking above the upside of that. So I do think that there is going to be some consolidation at some point. I'm looking for a 5 to 7% correction in the coming months. There is a chart. If I just quickly try and find it for you, there is a chart. I think I sent it to my Signal team. This is kind of the guideline that I'm looking at over the upcoming months. If I just quickly find it, this one's a better one. Here we go. So as you can see, we've started off the year on a very strong note, and this blue line that you see on your screens is the average pre-election year dating back to 1950. So this is 24 years of his historical data. And this is the average performance of the S&P 500 in a pre-election year, as I just mentioned. And, history will tell you that until pretty much mid-February time, we do tend to see a move higher in the stock market before we peak, let's say around mid-February. And then we do tend to move a little bit lower down to mid-March, beginning of April time. And then from there onwards, you do tend to see a very strong rally into year end, as it is a election year. Now, that makes a lot of sense to me, because I am actually in the camp where I do believe that the Fed will have to cut interest rates come March. I'm not in the camp of 6 to 7 rate cuts, but I am in the camp that I do believe that the Fed will have to cut in the month of March. We are starting to see some deterioration in economic data, and as well as that, I think it lines up with yields starting to fall very, very sharply. From my cycles, I do have that yields will start to fall very sharply from the end of February, beginning of March, and that's quite funny, because if we just quickly go over to the 10-year yield, it's plunging during today's trading session. We're seeing it currently trading at 3.876. This is a 10-year. It's a very good predictor as to where rates might go in the medium term. And as you can see, we're seeing rates fall rather significantly here. So that's going to wrap it up for today's video. There's a lot of food for thought there. I'll be back tomorrow for the final video of the week. Of course, don't forget, team, if you'd like to join my trading signal group, then make sure you visit my website, dailymarketmovements.com. But thank you very much for tuning in for today's video, and I look forward to seeing you all tomorrow.